Hey, welcome back to the Daily Dive. Joining us on the show today is Jay Martin from Cambridge House. Jay, welcome to the show.
Yeah, thanks for having me.
So, how would you describe Cambridge House to our audience?
What we do at Cambridge House is try to build smarter, better performing investment portfolios. That's at the core of it. We produce events, we host conversations on the YouTube channel. I write a weekly newsletter. But the reason we do all that stuff is because I and my team are investors first. And, through conversation, we find that's our best way to do diligence. I'm sure, as you know, Cassandra, in the small cap sector, if you're investing in early stage companies, it's pretty important to find your advantage, your unique edge. How are you going to stay ahead of the herd, right? And everybody's dealt a different hand. It's important that you recognize what that hand is. If you're a geologist or, maybe play to that strength and stick to the commodity sector and analyze companies with that skill set. For me, I have conversations for a living and I host events. So I'm all about the people, right? And so what my audience and I do is, we get excited about an investment idea and say that's renewable energy or cannabis or health science, copper, whatever that might be. For a variety of reasons, it's hit our radar. We feel like it's a good opportunity. The next step that I do is start shortlisting CEOs because again, back to that people-driven approach, who are the top performers that are going to steer the ship? Who's the supporting cast, the executives and the directors? Who are the shareholders? Do I know any? Do I respect them? Or, and then once we get a picture of who the people are, and if we agree they're the right people and we trust them, then we take the investment thesis to the macro personalities that we have on the show on our YouTube channel, where we can stress test this and say, yeah, you're right to be bullish on psychedelics, but it's not a capital markets play. It's a great industry. It's disrupting mental health. That's smart, but maybe not a smart place for capital. Or yes, you're correct to be bullish on renewable energy, but you're 10 years too early, and here's why. So by holding those two conversations against each other, grilling our short list of CEOs, stress testing our investment ideas, we get ideally to a better performing portfolio.
So, obviously, COVID has changed your business. Could you speak to that a bit?
Yes, yes. Yeah, up until March, we hosted a YouTube channel and I wrote the newsletter, but it was not the core focus. Hosting events was the core focus. And so we had conferences in Vancouver, Canada, Toronto, Canada, Palm Springs, California, San Francisco, Las Vegas. We've been all over the map, Boston, Chicago, Montreal. We'll go wherever the market is, but and that's a fun business. Like, it's really fun hosting events. I love it and I miss it. Fortuitously, when COVID hit and quarantine hit and everything like that hit, we as an event producer didn't have to wonder if our business was going to be impacted, right? A lot of industries weren't sure, like, is this going to impact me? I run a restaurant. Like, how deep is this going to go? And it was 3-6 months later before they realized, oh my gosh, we got to pivot quick. Whereas if you're an event producer, it was like, as soon as they announced a global pandemic, I called the team huddle and it said, game over for 18 months, not a day sooner. And maybe that wasn't long enough, but so we got to work right away. I mean, we're super lucky that we were able to see it from that perspective, having a bit of a front seat to the whole thing and pivot to content distribution as our core focus. And we had the assets, being our video platform, our newsletter to leverage and put all of our energy into. And truthfully, Cassandra, it's we'll go back to live events when we get the green light, but this business is so much fun. I know that I would never give it up.
You've had great success at a young age running a business where I'm sure your bandwidth gets tight. Do you have any organizational tools or tips for our audience?
Well, number one for myself is I have a personal board of directors, and it's not tied to my business or any of my businesses. It's 7 other entrepreneurs that operate in completely different industries. And we have a very structured rhythm. We meet monthly and we have a 5-hour meeting every month. And we all bring our issues, or we call it the top 5, bottom 5%, right? And we cover your business life, but it's more holistic than that. We cover your personal issues, your family issues, et cetera. So every month we show up and report on the top 5% and bottom 5% of our business, personal, and family occurrences in that 30-day period. And then every month, 2 of the members of this group present on the most pressing issue in their business, personal, or family life. And what that does is it's like group therapy for entrepreneurs, because as you know, when you run a business, it impacts everything you do, right? You're going to be all in on this. So it impacts your family balance, your health balance, all of this stuff. So protecting that balance is, in my experience, super, super important. But you get to learn from each other because we're all going through the same battles, right? We're all trying to find that balance. We're all becoming workaholics and we don't want to be. And you know, you're overcome with maybe an HR issue that you think is unique to you, but if you table this idea with 5 other entrepreneurs, you'll learn it's not. We're all going through it as we're building businesses and trying to you know, blaze a trail. So that's been the number one tool for me, and you know, everybody should find that. And there's a variety of ways you can do it, but definitely it's been the best tool for me. And then with my business, I use a variety of organizational tools. You know, but I'm high on accountability and high on metrics, right? What you measure, you improve. I firmly believe that.
Let's talk junior markets. From our view, it appears the millennial investor doesn't seem to have much love for mining. What do you think needs to happen for young people to start to catch the mining bug?
Yeah, that's a great question. Yeah, you know, so I feel two ways about that. I'm 36, so I think that makes me like 1 foot in the millennial camp and 1 foot outside. I think that's the 84 was the year that we began millennials. So, you know, and if I look at my YouTube audience in the demographics of it, you know, we're quite weighted in the millennial department, and the majority of our audience is sub 40 years old, right? And so they've arrived, right? And they are participating. We don't just cover junior mining, as you know, we cover everything. My personal passion is health science, so we cover a lot of that stuff. But anywhere we follow the puck, well, we try to get there before the puck and cover whatever part of the market, you know, looks appealing, whether that's cannabis, psychedelics, copper, doesn't matter. You know, we're looking for returns. And so, you know, I'd say in one sense they've arrived because I see them, they participate in our channels. I see them in the live chat, in the comments. It's pretty sophisticated conversations that we see. But for those that haven't arrived, or, you know, why haven't they come in greater numbers? You know, a couple things, right? Like if you look at the generation of gurus, like the generation older than me, like the Doug Caseys and the Rick Rules in this sector, and you ask them what attracted you to the junior mining sector, they'll all tell you the same thing. It was the asymmetric returns you can achieve in this industry. If you can find your edge and pick the winners, you know, you can find those 5x to 20x returns. And that's pretty unique, or at least it used to be, you know. When I talk about the returns I generate and the risk I take and all of this that occurs in the junior mining sector, if I bring that to a conversation with some friends of mine who trade cryptocurrencies, it's like I'm in the most boring industry on the planet, right? Like they're seeing the returns that and the losses that I'm carrying over a 6 to 12 month period in like 36 to 48 hours, right? So, you know, there's more options for investors, plus fractional trading. Anybody can be a day trader these days with no fees, purchase whatever shares they want, you know, fractional, et cetera. And so if you're an investor and you're new to the market and there's no barriers to becoming a day trader, and we're in the 12th year of a frothy bull market in the US, then your only experience with broad equities has been they go up. Sometimes they correct and then they go up again. Then that's pretty attractive. And I understand why. And you know, that's not going to last forever. The music stops. It always does. And when it does, we'll see a shift in behavior and, you know, all this. Some will just get cut loose and probably never return, but others will look for a more sophisticated approach. And then we'll maybe see more money come to the space. But there's a lot of distractions, right? That's probably part of it.
So Jay, when you evaluate junior companies you're interested in investing in, how do you go about your diligence?
Yeah. So for me, it comes down to one very simple question. You know, when you're investing in companies of that size, you're not so much investing in the product or the service or the potential of the industry to move. You're investing in the integrity, the judgment, and the decision-making of one or two individuals who are going to be having an adventure with your money. So do you trust them? Do you trust that they're going to make the best decisions? And they're only going to chase the best business opportunities, if not throw good money after bad. Do you trust that when plan A and B fails, because it's going to, that they're going to have the resilience and energy to have a plan C? And are they going to have a plan C, right? Mm-hmm. So for me, that's what it comes down to every single time is, do I trust this individual and their supporting cast? Because that's really what you're investing in. You're investing in a person, first and foremost. And I'll get argued on that by, you know, a technical analyst or a geo that says you got to look at the rocks, and you do. But you know what? Like, I'm not a geologist. I want someone else to lose sleep over the geology. I'll lose sleep over the people, right? It gets back to playing the hand you're dealt. But like, man, I harp that all day long. And on our channel, that's why we have interviews. Like, that's why our content is all interview based, because I want to introduce the CEO to our audience. Together, we can decide whether or not we trust this individual with our cash, right? It's very important. And that's criteria number 1, 2, and 3 for me.
Where do you sit on the Bitcoin gold debate?
Well, I invest in both, and I invest in both very similarly. I don't trade either. I want to have exposure to each, and I dollar cost average in. So I don't lose sleep over the price. It's an exercise in discipline holding Bitcoin. I've learned it's a whole new kind of volatility. And so that's why it's so important as an investor to have rules. And that's the easy part, but following them is the hard part. And so there's some stocks I trade, some speculations that I'm not looking to hold for 3 years, some that I am, some that I'll position myself in. And it's the be right, sit tight philosophy. I believe in 2 to 3 years, this is going to be a big home run for me. And I treat the position that way. If this is just a speculation that I think there's a big sentiment trade here because I see a bunch of money moving in, I treat the position that way. And in the case of gold and Bitcoin, I treat them as a safe haven asset class. And I know to some people that sounds bananas. How could Bitcoin be a safe haven asset class when it's so volatile? But that's the decision that I've made about that, right? I'm not going to try to trade it. I'm not trying to speculate. I'm parking money there on a consistent basis because I want a horse in that race. And it's not like it's going to be there forever, right? But it's definitely a long-term passive approach. And I think the days of choosing one or the other, I think that's a mistake. And I think that a lot of the conversations that I host on the channel, you see this debate. It's like one or the other. If you're a Bitcoin investor, gold had its time. That time's over. We're a technology-driven species now. Like, I get it. It used to be applicable 5,000 years, blah, blah, blah. Things change eventually, and they've changed now. And on the gold side, what is cryptocurrency? It's not backed by anything. There's no tangible asset. There's no intrinsic value. It's all hype and blah, blah, blah. You can't transact with it really. So what is it? It's just a speculation, right? And I don't know that we have the answer to either of those questions. I believe that we don't, right? And just because you don't like something, to turn a blind eye to it, you're the only one that gets hurt in that scenario. So, that's why I'm passive. I don't know enough to be aggressive or dangerous, but I want a horse in the race. And that's how I play it.
What sectors are you most interested for investment ideas in 2021?
So for me, 2021 is probably going to be all about the commodity sector. And there's a variety of reasons, whether you're looking at gold, for example, maybe the first commodity a lot of people look at in the metal space. You can't ignore the macro trends that are just creating this perfect storm to direct cash towards gold, whether it's currency debasement, possible inflation, global instability, a US stock market that's propped up on nothing but newly minted currency. Like that's a terrifying scenario. And so historically gold does very well in those conditions. It's done very well in 2020. We're looking hard at silver and copper. Silver as kind of a similar play, right? But more importantly to me, it's got a lot of utility. If you look at the, Biden now controlling the Senate, it's going to start with $400 billion pushing forward his renewable energy plan. That's probably just the appetizer. And so what's that going to do to copper and silver demand? Like pretty dramatically move the needle is my guess. And we're going to hit a supply squeeze here. And so I'm positioned in a number of silver and copper. Well, silver explorers, developers, and producers. In the copper sector, there's a royalty company that I like a lot that I'm positioned pretty aggressively in. And then I like playing the copper market's a bit different, right? Because if you're a gold explorer developer, you have a number of a variety of options when it comes to that exit, right? If you find the economic deposit and et cetera, this could become a mine. As a junior explorer, it's feasible that you could raise enough capital to build that mine yourself and move this to production. And if not, the number of suitors that might be looking to pick you off are in the hundreds. You're looking at junior producers to mid tiers to the big caps. But in the copper sector, your exit options are like 2% of that, because first of all, no junior would be able to raise the billions of dollars it takes to build a copper mine, and it takes about 10 times as long and 10 times more capital. And as a consequence of that, there's only 5 to 6 companies that would actually buy you. And so you have to be really strategic when you're looking at copper explorers, because most don't think that far ahead. They're capitalizing on a hot commodities market and speculation, but how are they actually going to get the liquidation event, the exit, like, get to production? They don't think that far ahead, and investors need to. So, but anyways, I like a lot of copper companies. I'm looking quite hard there. And then in the back of my mind, like the biggest market of my lifetime, I still believe is going to be health science. And this will be the biggest bull market of my lifetime. I believe that to be the case. It's not just my personal passion, but I think the world is your market in this industry, and people who doesn't want to feel better and live longer. And, the applications, technologies, and therapies that facilitate this are becoming more affordable, accessible, and increasingly achieving mass adoption. So, that's the sector that I'll always have one foot in, no matter what's happening. I've got a couple feet in there now, in addition to the commodity sector. But 2021, I think it's a commodities market, and there's going to be unique opportunities elsewhere, psychedelics, et cetera, if you're looking at that kind of thing.
Well, Jay, thank you so much for joining us on the show today.
Yeah, my pleasure. Thanks for having me on.
And for our viewers at home, don't forget to click that subscribe bell below. Follow us on all of our social media platforms. We'll see you next time on The Dive to talk all things small caps.